Bitcoin's post-election tear just keeps on going, with President-elect Donald Trump's crypto-friendly policies sending the asset higher. As Bitcoin keeps climbing, so do crypto ETFs, making it easier, more attractive, potentially for more cautious investors to get involved. Joining us now, Robbie Mitchnick, BlackRock head of digital assets. And among the crypto ETFs that have been introduced, the BlackRock offering has been enormously successful, drawing just a lot of money into it in a short period of time. It's up something like $13 billion in flows since the election. What is going on, Robbie? Is it just, I mean, we know that crypto trades on vibes a lot, and the vibes right now are pretty good.
They are pretty good. Julie, Josh, thanks for having me on. I think obviously the election and the sort of confidence and optimism that the market has had coming out of that for Bitcoin and crypto is a part of it. I also think, frankly, 2024 was probably a tough year for Bitcoin x the ETFs happening because you had the confluence of higher interest rates for longer than was expected. You had 4 bankruptcy liquidations that were a decade in the making that have been sort of constant selling pressure in the market. That was sort of offset by the new access that the ETFs had created. So now for the first time, we're seeing a catalyst, a fundamental catalyst, and we're not having any more of that sort of bankruptcy liquidation overhang. And you put all that together, you've seen the results in the market.
So Trump runs, clearly, Robbie's a friend of crypto, right? So the feeling is now you have a real ally in the White House. And he made a series of different promises and pledges on the campaign trail. Do you have a sense of what you think the industry would like him to prioritize?
Well, I think the big thing that folks are focused on is this idea of a strategic Bitcoin reserve. I don't know whether that's going to happen or not. I think one of the really important signaling things that he did from a Bitcoin perspective was that the roughly 200,000 Bitcoin that the U.S. government still holds, that would not be sold, because that was an overhang that had existed in the market for a long time. Who knows what happens on the actual strategic Bitcoin reserve piece?
Because we have seen this rally partially on hopes around a better regulatory framework, what have you, and there was a report today, for example, that President-elect Trump is meeting with Brian Armstrong, the CEO of Coinbase, to discuss who could head up the SEC. What kind of room is there for disappointment? In other words, if it's not the pick that the industry wants for the SEC, if the Bitcoin reserve only holds and doesn't buy more, are these potentially things that will take Bitcoin down?
Maybe. I think the fun thing about this market is it's pretty inefficient sometimes. And people and investors of all stripes are trying to figure out how to think about valuation, how to price in different catalysts, different risks, et cetera. And I don't think that's particularly well understood at all by a lot of the market today. And that's why we think about our role at BlackRock and how we think about it. It's very much investor education focused around IBIT, around Bitcoin, around these products, because there is, I think, a gap in understanding of how to think about different developments, how to think about macroeconomic interplay, how to think about Bitcoin in a portfolio.
And when you're talking about, when you're engaged in that kind of education, what do you say? What is the role?
Yeah, well, we think that there's been a kind of misconception that's frankly been perpetuated by a lot of crypto research and other publications characterizing Bitcoin as a risk-on asset. Bitcoin is very clearly a risky asset, right? It's volatile, it's relatively new and unproven still. For a long time, it's faced regulatory uncertainty. But that's a different concept from being risk-on, which implies that you're supposed to correlate and go up and down with equities. Fundamentally, the risks and return drivers of Bitcoin are very different from what they are of equities and most other so-called risk-on assets. And understanding that distinction is absolutely critical for most institutional investors and for wealth advisors, because it totally changes the role that it can play in a portfolio. If it is uncorrelated, which fundamentally kind of suggests it is, that's where you get this potential for it as a diversifier and even as a potential hedge against some of the macro risks that exist, some of the U.S. fiscal sustainability concerns around the world, fears of inflation, monetary debasement, et cetera.